How to make money in real estate. Lecture 10. Investing in commercial real estate. Commercial real estate and residential real estate comprise the two primary categories of real estate property. As its name implies, commercial real estate is used in commerce. Everyone starts with residential properties, but if you really want to be a successful real estate investor, you need to move to commercial. Types of commercial property. Commercial real estate is typically categorized into four classes, depending on their function: office space, retail, industrial use, hotels. For more information, please watch my previous lecture 9. Types of commercial property. Commercial requires bigger initial investment. Commercial deals are a lot more complicated compared to residential and require a lot more research to find and evaluate. Acquiring a commercial property typically requires more capital upfront than acquiring a residential rental in the same area. And the risk is higher. There is a lot more money on the line you have to spend when acquiring commercial property. And all that money is invested in a hard asset that cannot be physically moved or readily liquidated. Once you have acquired a commercial property, you can expect some additional large capital expenditures to follow. Commercial investment is more difficult to finance. Many banks are reluctant to lend on retail commercial spaces, because they are seen as a higher risk due to the online retailer effect. One key factor affecting financing is location. Some locations are booming, but others are in the depths of an economic rut. The consensus of the commercial lenders in some degraded areas seems to be that the banks are not interested in writing a loan unless there are tenants with long leases already in place. So, there are not a lot of good deals. If an owner already has a property he probably does not wish to sell. Commercial investment deals are more complicated to be analyzed. Commercial real estate investing is more like owning a small business. The most important thing to making money is increasing your net operating income. In addition to other acquisition and valuation ratio, you need to get details like maintenance records, expenses and rental history, which are often not found in a listing. Income potential and return on investment. The best reason to invest in commercial is the earning potential. The return on investment varies from one kind of property to another. It depends on location, property type, vacancy rate, property management cost, current economy, and external factors, such as a pandemic. For commercial properties, investors compare properties by looking primarily at capitalization rate and cash-on-cash return. Again, there is a lot of variance based on location and type of property, but the consensus seems to be that commercial investors aim for a capitalization rate of 8% to 15% and a cash-on-cash return between 6% and 12%. Risk on commercial investment. It is crucial to keep your risk to a minimum, whether you are investing in residential or commercial property. Commercial real estate requires a larger cash outlay. And you are putting all your eggs in one basket, if you can afford only one commercial property. With residential properties, you can spread out your risk and diversify across multiple types of properties located in different areas. Investors can make and lose a lot of money in every investment of real estate. Those who do well, invest in markets they understand, become an expert in that market, execute a sound strategy within that market. Investors who jump in because they saw someone else make money and believe it must be easy, end up with losses. My opinion is that it is riskier to put all your funds into one commercial property than to spread the risk across many residential properties. Professional relationships. Small business owners tend to take pride in his businesses and want to protect his livelihood. As such, the landlord and tenant have more of a business-to-business customer relationship, which helps keep interactions professional and courteous. public eye on the commercial property. Retail tenant has a vested interest in maintaining his store and storefront, because if he do not, it will affect his business. As a result, commercial tenant and property owner interests are aligned, which helps the owner maintain and improve the quality of the property, and ultimately, the value of their investment. A strategic improvement can have a huge impact on a property's resale value if it increases the revenue generated by the commercial property. Limited hours of operation. Businesses usually go home at night. In other words, you work when they work. You should be able to rest without having to worry about receiving a midnight call. Commercial real estate is valued with more objective price evaluations. Commercial real estate is valued with a more precise approach, compared to residential. Local comparable are considered, but the market value is based almost entirely on the amount of revenue generated by the property itself. It is often easier to evaluate the prices of commercial property than residential, because you can request the current owner's income statement and determine what the price should be based on that. The asking price should be set at a price where an investor can earn the area's prevailing capitalization rate for the commercial property type they are looking at, retail, office, industrial, and so forth. Commercial leases. Some businesses own the buildings they occupy. However, the more typical case is that the commercial property is leased. Usually, an investor or group of investors owns the building and collects rent from each business that operates there. Commercial lease rates, the price to occupy a space over a stated period, is customarily quoted in annual rental euro per square foot. Conversely, residential real estate rates quote as an annual sum or a monthly rent. Enjoy longer lease terms with commercial properties. Commercial leases are much longer than residential leases. Residential leases often run 6 or 12 months. Commercial leases will typically run from 1 year to 10 years or more, with office and retail space typically averaging between 5 and 10-year leases. The benefits of a longer lease are more assurance of reliable cash flow, lower vacancy rates, lower turnover costs. Of course, there is a downside to long lease terms. If you are unhappy with a tenant, it is easier to simply not run you a short-term lease, and make them leave, than it is to break a long-term lease. Triple net leases. There are variations to triple net leases, but the basic concept is that you, as the property owner, do not have to pay expenses on the property, as would be the case with residential real estate. The lessee handles all property expenses directly, including real estate taxes. The only expense you will have to pay is your mortgage. You as an investor get to have one of the lowest maintenance income producers for your money. More flexibility in lease terms. Fewer consumer protection laws govern commercial leases, unlike the dozens of state laws, such as security deposit limits and termination rules, that cover residential real estate. Commercial properties perform less consistently in economic downturns. Residential properties weather economic downturns much better than commercial retail space does. When there is a market downturn, retailers are usually the first to suffer, and they can be hit hard. Even in good economic conditions, small business owner has a high failure rate. So, though you have longer leases with commercial properties, there is no guarantee that your retail tenant will be in business for the entire term of the lease. No matter what the economy is doing, people need a place to live. And when there is a downturn, residential property owner does not suffer as much or as quickly as a retailer. Renter place a high priority on paying rent so he can be sure he have a place to call home. The buyer pool is smaller for commercial property. The retail sales sector has not been performing well when compared to other sectors. Retail stores face stiff competition from the big box stores. And there are also online retailers that can often deliver the same products cheaper and much more conveniently. There are of empty commercial spaces in many parts of each country. There just are not enough retail tenants to fill them all. This drives down the rental price. And it often takes an average of 6 months to rent out a commercial space. This is a factor that increases the cost of vacancies. On the other hand, residential rentals have a steady demand in most areas. Everyone needs a place to live. And many millennials are renting longer before buying homes. It takes less time to find a renter. It often takes just 30 to 45 days in most markets. Conclusion. The commercial real estate investment market is a complex system of firms based in different sectors of the industry. The future of companies in this sector are most directly affected and tied to changes in global economic conditions. Depending on what the firms focus on, from land and development, retail shopping centers, industry, office space, are many factors affecting their strategy, overall performance, and future. Thank you for watching the video. If you watch all my lectures, you may be able to start investing in rental properties a little quicker. Please subscribe to my channel and press the bell to get alerts when a new video is posted. Please write your comments, questions, or concerns you would like to share.